The month of May was a tough one for markets. Sell in May and go away. Did you do that?
Well, buy back in June at the risk of being a prune. I don't subscribe to any of these. I mean, we're long-term investors. So if anything, we've been using it as an opportunity. If anyone's had cash and been sitting on the sidelines, we've been urging them to participate at these levels. And there are many, many anxieties, and there are always reasons to be out of the market and for whatever reason, and lately it's been, everyone's been worried about the Eurozone and is there going to be a sovereign default and should we let one of the smaller EU economies actually default rather than prop them up? Jack Bogle, I don't know if you know him, he's one of the guys he's one of the founders of Vanguard, which is one of the biggest mutual funds, ETF type managers. So he's kind of a low cost type guy, and he said you should just carry on buying because you have no way of knowing. And he was interviewed, and I heard him say, well, where did the euro first float? At 117 to the dollar. What's it now? 123. What's the fuss? It was overvalued, and now it's just correcting against a strengthening US economy. So it's quite interesting to see. Obviously, growth in the Eurozone is going to be fairly muted for the next 2-3 years. So it's just right that kind of your measure of the broader EU economy, the euro, gets sold off accordingly.
GDP growth was revised downwards yesterday for the US.
Yes, no, it was. I mean, that was the second read. Remember, they have 3 reads of first quarter, but still 3% for the first quarter. That's a hell of a lot better than the numbers we're seeing out of the Eurozone, where they're struggling to eke out even just a marginal gain. So, the US probably has the correct model because, at the beginning they slashed rates dramatically and they shed jobs like nobody's business. And they've got to the point now where they are adding jobs tentatively, and people might argue that the real unemployment rate is still 1 in 5 in the workforce. But the official number still comes out at around 10%. But I'd like to think that companies and even governments have got a lot more efficient in this whole process. And that's perhaps what the EU needs. Then they seem to be lagging, and maybe they're lagging the US by a good 18 months. But there needs to be the political will. Because the first thing for me that's come out of this crisis is the separation of countries' treasuries from the central banks is probably not a very good idea. But the fact of the matter is that you can't coordinate all of these countries together if they're not abiding by the same set of circumstances and rules. So time will tell whether the EU in its current form will continue to exist. I think there is at some level a big political momentum to be able to make it exist, and that's what was missing for me at the beginning of this crisis.
Still a lot of pressure in the Eurozone, but the OECD are forecasting a 4.6% growth in the global economy. Are you seeing it getting there?
Yeah, I think what in our time zone, I often lament the fact that we only consume English data and we're not consuming data further out east. But I think our command of Mandarin and Hindi is probably terrible. But all the stuff that we consume comes out of the developed world. So it's easy to feel down on yourself if you're not reading news from other parts of the world. So you might well say, okay, well, the Eurozone's going to grow at less than 1% this year, and next year, who knows, 1.2, 1.3%. But in places like India, they're struggling to slow the economy down. And in China, even more so. And you're seeing people are having these anxieties about China growing too fast. So to be perfectly honest, what we're seeing is an economic shift in our time, and it's happened quicker simply because of this crisis. And it's the over-leveraged countries that are going to struggle for the better part of half a decade. But interestingly, people are starting to say, well, foreign bonds, they're high yielders, the countries aren't over-indebted, maybe those are safe havens. And I think we're starting to come to the realization that the term that Jim O'Neill coined a decade back, the BRICS type, that's Brazil, Russia, India, China. These are real and bigger participants. And now people are starting to measure where's the inflection point? Where does China overtake the US in nominal terms? Is it 2027? Is it going to be earlier?
And if we look at the risk that's currently in the market, we've got the LIBOR 3-month rate. What is it doing at the moment?
Yeah, LIBOR was the London interbank rate. That's the rate at which the banks lend to each other over the treasury rate. So That was at a low not seen in a number of years, in multi-years. I think it was at 14 basis points a few months ago. Now it's at over 50 basis points. But just to remind people of how bad the crisis got back in September, October 2008, it spiked out to 450 basis points. So in reality, we're only 1/9 of the way of banks' perceived risks of each other. Because in that time, if you rewind back to October 2008, no one would lend to anyone. And if they did, they would demand such a high rate. And that's why governments had to step in. So that's why we've seen the LIBOR rate, which is a good measure of risk, tick up quite sharply.